Does it ever feel like you're way overpaying for your business insurance? Maybe you think the underwriters are just making a killing off of your insurance premiums. A lot of business owners I speak with feel this way. They have these questions. However, there's one important ratio you need to keep track of if you're a business owner that can help answer this question and let you know, are you overpaying, or maybe you're actually getting a fair price? The ratio I'm talking about is your loss ratio. I'm not going to get into details on it, but I'm just going to give you a high level what it is and why it's important for you to know it. So first and foremost, what it is, it's taking the losses that your insurance companies have paid over a set period of time, typically 5 years, and divided by the premiums you've paid. Once you get that number, that will give you what your loss ratio is. Now, you need to know, are you a good risk, a bad risk, or just kind of average? So a bad risk is someone who has a 60% loss ratio or greater. An average risk is around 40 to 60%. And a great risk would be below 30%, where an excellent risk, 0 to 10%, 0 to 15%. If you're in that 0 to 10 or 15%, it means you are having no losses. Essentially, you're paying for insurance and you're not using it. So that kind of stinks. However, the reason it's good to be there, though, and the reason it's good to know if you're good, is it gives you leverage in negotiating. So let's say you have an excellent loss ratio, 10%, and you're going into a renewal. Well, now you can use that to your advantage if the carrier you're with is trying to give you an increase because the market stinks. Well, I don't care. This is where I stand, Or if they're not willing to play with you, now you and your agent work together and you can market your risk and hopefully get better offers. The other reason it's good to know if you are such a really good risk and running a low loss ratio is maybe it's time to look at an alternative strategy of insurance altogether. Instead of a fully insured plan, maybe you want to look at a group captive or some type of loss sensitive plan. Now, you also want to know if you're a bad risk, right? Because this can let you know, maybe it validates what your broker's telling you, right? Maybe this is why you're getting the increase and you can see it on paper. Yeah, my loss ratio stinks. That makes sense. But more importantly, it lets you know where you have room to improve. So you can also, and you should really look at your loss ratio by line of business. So auto, comp, whatever it may be, and then hone in and figure out, where's the problem area and how can we drive this thing down? Now, there's a couple of things that might skew the loss ratio that I just want to briefly mention so you're aware of it. You might think you have a good loss ratio. However, let's say you've changed carriers every year. The current carrier you're with might be giving you an increase because with them, your 5-year loss ratio is great, but with them particularly, you have maybe 100% loss ratio. So they're going to give you an increase. Another thing to keep in mind is that, if you've frequency is the one thing that's not really captured on a loss ratio. So underwriters also do look at frequency. You could be running a great loss ratio, have had very little claims paid out, but if you've had a lot of claims, underwriters commonly say frequency breeds severity. So they're going to be a little bit more worried, thinking, hey, if I jump on this risk this year, am I the year that one little small claim blows up into $1 million claim? So anyways, remember loss ratio. Ask your agent about it, what it is. It's pretty easy to calculate. You could even calculate it yourself, but it's an important number that I think will help you in your negotiations. Hey, if you enjoyed this video, please share it with other people, comment below, and appreciate your support. Thanks.